Hello and welcome back to Vision Economics Academy. Today we are concluding the income method, the unsolved practicals from the book of Sandeep Garg. Let us begin. The first question has asked us to find operating surplus. We know what operating surplus is. It's rent plus royalty plus interest plus profit. So adding all these components will get the operating surplus. So rent is 80 plus royalty is 40 plus interest is 130 and profit is 100. So adding all this will get 350 crores, which is the value of operating surplus. 80 plus 40 plus 130 plus 100 would give us 350 crores. Similarly, here also we need to find operating surplus. Now, operating surplus equals to rent is there, royalty is there, interest is there, profit is there. So we'll just put the sub points value here first. 1 plus 2 plus 3 plus 5. We can do in any way. You can either write this or you can write the number here. Okay, and put the value 5 plus 75 plus 30 plus 45. Okay, so 80 plus 30 110 plus 45 155 crores. Okay, so operating surplus is 155 crores. Now 23B, we have to find compensation of employees. Wages and salaries in cash is part of it. Rent free accommodation to employees, so it is given by the employer, so it would be part of the compensation of employees. And employers contribution to provident fund, employers contribution is added. So compensation of employees equals to 2 plus 3 plus 4. The value of 2 is 60,000 plus 3 is 30,000 plus 7,500, which will give us 97,500 crores. Now the next question asks us to find value of operating surplus again. Now here the question is slightly different. Value of output and intermediate cost is given. So GVAMP or GDPMP equals to value of output minus intermediate cost. So 800 minus 200 will give us 600. So 600 is GDPMP. Now what is the value? Now in order to get GDPMP, what we need to put the value is compensation of employees plus operating surplus plus mixed income of self-employed. These three added together will give us NDPFC. Now from FC to MP plus NIT, and from net to gross is plus depreciation, right? Then compensation of employees, what is the value of it? 200. Okay, so 600 equals to compensation of employees 200 plus operating surplus is what we need to find, plus mixed income is 100 plus indirect tax 30 minus subsidy 50, that is minus 50. Indirect tax is 30, sorry, 30 minus 50 plus depreciation is also 20. Okay, Therefore 200 plus 100 is 300. 300 coming this side will give us 300. 600 minus 300. Then operating surplus is 300. Here what will happen? These two will get cancelled out. Minus 20 plus 20. Okay, it will get cancelled out. Then operating surplus is 300 crores. Alright. Now question number 25. Calculate operating surplus from the following data. Now we have to find operating surplus. Rent is also not given, royalty is also not given, interest is also not given, profit is also not given. So what is given here is GDPFC. From there only we can find it. GDPFC equals to compensation of employees plus operating surplus plus mixed income of self-employed will give us NDPFC. From FC to FC we don't have to do anything. Net to gross plus depreciation. Now compensation of employees is 300 plus operating surplus is what we have to find. GDPFC is already given, 650 plus mixed income is not there, and depreciation is consumption of fixed capital, that is 100. 300 plus 100 will give us 400. 400 coming this side would give us 250. Therefore operating surplus equals to 250 crores. Alright. Now the last question is asking us to find operating surplus and compensation of employees. Operating surplus is something very easy. Rent, royalty, profit and interest. If we add all this, 3 plus 4 plus 7 plus 8. Okay, so 20 plus 200 plus 50 plus 100 will give us 370 crores. So that is the value of operating surplus. Now GDP-MP is given. We need to find compensation of employees. GDP-MP equals to compensation of employees plus operating surplus plus mixed income of self-employed, which will give us NDPFC. From FC to MP plus net indirect taxes, and from net to gross is plus depreciation. Therefore we'll just put the value now. The value of GDP-MP is 1800 equals to compensation of employees is something we have to find. So operating surplus is 370, mixed income is not there, so net indirect tax is indirect tax minus subsidy, that is 250 minus 50 and plus 200. Now keeping compensation of employees in one side, we keeping all the numbers in one. 1800 minus 370 minus 200 minus 200 will give you compensation of employees. So 370 plus 200, 570, 570 plus 200 is 770. So 1800 minus 770 is equals to 1030 crores. So it is 1030 crores. Therefore we have got the answer. With this we conclude the income method unsolved practicals. In the previous episode we have completed till question number 22. That was the first part of the income method, and in this video we have done the operating surplus and compensation of employees particulars question. So please like, subscribe and hit the bell icon, and please encourage us. This is Vision Economics Academy signing off. Thank you.